And welcome to the 37th episode of Hung Han Sweatin' Money. There we go. Recorded on May 8th, 2016. Wait, hold on. Can you hear me? Can you hear me?
I can hear you.
Okay, great. I was having some technical difficulties. Anyways, let me go on with the mandatory disclaimer. We may have ownership or other positions in the stocks mentioned on this show. Don't buy stocks based solely off of what you hear from this podcast. And always do your own homework and research before investing in stocks. So, I'm your host, come on, Kong, along with my co-host, Geek. What? Son.
Deep son.
Yeah. So, yeah, I'm also having connection issues. Yay.
Oh man, being
Uh,
bombarded over there.
well, what are you going to do, right?
Mm.
So let's take a look at what's in the news. Advanced Micro Devices, for a couple of years there, gave Intel a run for their money. And before that, they had a cult-like following because it was a fairly decent and cheap alternative to Intel, which up until that point had a virtual monopoly in the home computer chip market. Over the years, however, its performance has lagged behind Intel's, and its stock has dropped dramatically, as it was the verge of. I mean, it was on the verge of bankruptcy. 2 weeks ago, it released its earnings report and did better than expected. So, is this beginning to its comeback? New gaming consoles are going to be released, and AMD chips have traditionally been relied upon for the graphics cards. Whoops. So, any thoughts?
I mean, which consoles use the AMD chips?
All three of them.
Really?
Yeah.
Hmm. Which I see. That's interesting. Valid market.
Yeah, and if I can bring up the chart without going to the next slide here. Yeah. Okay, so if you notice, like, right before the earnings report, right, it was like, two something, whatever, and then all of a sudden it just shot up. So, I mean, granted, though, it's like down to like 373, so they're pretty much still on their, last rung of the ladder. So,
Hmm. I would say it's one of those where if you're gonna buy it, you should probably wake up at 6 in the morning or right before the bell and just watch it. You see that little climb up there?
right,
At the very beginning. So this is, some of the commenters on you see on like financial investment shows. They would say that, what is built in? Is it built into the price? Is it built in? What is built in? So basically, whenever these news come about and the changes in price reflect people's aspirations and hopes for all the new recent news coming out. So you look at the very beginning of the news and you'll see, or the very beginning of the opening, you see a climb kind of up. Um, a bit. So in essence, is that climb is the built-in factor. Is that there people are speculating and pricing according to like their hopes and aspirations with that news release. So you might want to be in as part of that. But then after the news has taken its course, the stock price kind of finds a new equilibrium. It kind of just flattens out
right.
and hovers around a new equilibrium. So then the question is, has the news achieved its full effect? Like the question is like, has it reached every single sector of investors that have it reached like the pertinent investors that have an influence on prices, or not? Are there still people waiting to buy in, or are they delayed on the news? That is essentially what you're looking for whenever you have like a delayed reaction like this. So it depends. It's one of those. If I were to watch it, it starts climbing up. I would kind of buy it at the beginning when it starts shooting up, and the minute it starts dipping back down aggressively or dipping back down at all, like kind of like I don't think anyone would just sell the stock based on this type of news. So if it's my understanding that it will climb up, then I would just basically hold it, and then as it shoots up, after it's done climbing, then I sell it like after it starts dipping, because I don't think it's like it depends, on your viewpoint. If you think it's gonna sustain itself or not, um, yeah, that's roughly how I would play it. if I were to buy the stock right now.
Okay. All right, so let's move on. A little late in covering this, but last month Amazon made some changes to its Amazon Prime membership. They will offer a purely video streaming option, or if you pay year. Hello?
I'm here.
Okay. So if you pay yearly, you still receive free shipping and online streaming. Of course, there are other options to pay by month, but they're more expensive. So if you go with the annual payment, you save $33 a year, and it's actually cheaper than Netflix's $10 a month plan.
All right.
Now, Chamath Palapitiva, the CEO of Social Capital, says that Amazon is a $3 trillion company. He says there are three major arms: shopping, streaming, and cloud services will each make $1 trillion. So I don't know if I came in clear about that.
Yeah, Amazon make $1 trillion, 3 trillion.
Right. So
On what basis? Huh.
he didn't exactly say. But I mean, going back to their new plan, I mean, like the fact that they're going against Netflix and they're doing it quite successfully. You know what? I mean, think about it, right? Amazon, unlike Netflix is only one product. Amazon, they've got like three different things going on. One, they're selling things. They're making money off of the merchants. I mean, and then there's the streaming, and then there's also the web cloud services. So they're pretty diverse.
Yeah, but I don't know where he got the $3 trillion business from. I mean, if you look at their revenue, it's 107 billion, maybe. I know it's kind of weird to toss around huge numbers like 107 billion, like it's nothing, but it's not really. That's like 1/10 of 1 trillion, and so if you were to factor by three, it's like 1/30th of 3 trillion. So that's like a 30-fold like amplification. Where do you get that number from?
Yeah, good question. Well, he's saying that. Hold on.
I mean, the richest man on earth is like Buffett, and I think his net worth was 60 billion.
Yeah.
No one can afford to buy Amazon.
I think if I remember correctly, let me double check the website. But if I'm not mistaken, I mean, I think he was saying that it's going to reach that number by the end of the year.
Extremely skeptical. The laws of supply and demand and profitability dictates that at $3 trillion of profit, someone will compete with you. I
Yeah,
mean,
but who is competing successfully against Amazon at this point?
well, let's say this. Before, let's say your company, you project it to make maybe, I would say it's like the super lotto effect. You know, the larger the prize at the end, the more people are willing to take a chance at like trying to take it down. You know,
Yeah.
and if the number is I think the entire United States GDP is like at that amount, right? Let's see here, United States GDP.
Oh, I'm sorry. No, he says within the next 10 years. Sorry.
Okay, it's like the entire United States GDP is roughly let's see total 16 trillion.
Okay.
You know, they're saying that hey, we're gonna be 1/5 of like of the United States GDP. I'm extremely skeptical now. 1/5. Like 1/5 of the entire nation does nothing but work for Amazon. I mean, I think it has reach, but I don't think it reaches that far. And I'm extremely skeptical it can reach that far without Google saying, "Hey, Amazon, hey, how are you doing? We're also opening the server space because we have so many damn servers for our search engines we don't know what to do with, right?" at at $3 trillion, I like Google will definitely be in that space. Who else be in that space? Facebook. Facebook will come in that space. Who else? Microsoft, and hell, maybe even Yahoo will get in piece of action. Who knows, right? There's a ton of
Are you serious? Yahoo? I mean,
at $3 trillion. Hell, random people you never even heard of will probably get into that space. It's even better than winning the Super Lotto. You look at $200 million and people are betting like 30 grand on it.
well,
That's millions. 30 grand millions, and then you have billions, and then you
well,
have
what he's
trillions.
saying within the next 10 years, right? So I mean, if you look at it, he's saying that all three of these businesses are going to be money makers. Now, I mean, aside from the other two, like what you were just talking about with the cloud services and all that, everyone is pretty much getting in on that. We had mentioned earlier that, like you had mentioned Google, and that's exactly why Google had what is it? They bought new servers, and Qualcomm is actually kind of benefiting from it because their new servers are run by Qualcomm chips. And then Intel, of course, is trying to compete in that area, and because AMD is trying to, get itself back on its 2 feet, they're also trying to do the same thing. I can't remember with which company they partnered with, but they partnered with some company, and they're basically trying to do the same thing, trying to like even though they're not going to be in on the cloud service spacing, those the cloud computers themselves, the servers, the racks, they're all going to be powered by some sort of chip, and they want it to be theirs. Is Nvidia getting in on that? Not exactly for like general purpose cloud computing, but they are getting in on video streaming and gaming and things like that. So, I mean, somewhat like not quite cloud services, but they're somewhat in that game. So, I mean,
All
everyone's
right,
trying to
let's
get
just
in
say
on
this. He's promising or he's believing
it.
that
Mhm.
he can grow the company's revenue by 30 folds. Is that right? Oh, wait, 30? Yeah. 30 folds within the next 10 years without opposition. I'm extremely skeptical. And you look at the annual reports for this company and you look back on it, is that the last 4 years, like this year he made like the company, or 2015 the company made 107 billion revenue. The year
Yeah.
before that 88, let's give him 89 billion, and then before that 74 billion, and before that 61 billion, right? At that rate of growth, it's so unlikely that he can achieve, like $3 trillion of revenue, assuming that Amazon properly, their stock tickers annual reports properly represents all their holdings. If there if there's like private holdings that I'm not aware of, then sure. But I'm extremely skeptical. I mean, perhaps Amazon is facing like lack of opposition right now, and they're growing really well. I can agree to that. I can concede to that point. Although there's also a question of like, oh, does Amazon Prime provide as great of content as Netflix? I was like, I'm not too sure. Netflix does seem to have the edge on the content front at this moment. What else is there? And then the hosting stuff. Well, they're good as long as Google doesn't go into that space. But then, if Google does go into the space, at what point, you know, um, yeah, like, because who you trust more, Amazon or Google? And I kind of have to lean toward Google. Like, I have more faith in Google than I would have in Amazon. I mean, I have never heard of a Google server cluster going down. I've heard of Amazon like zones going out, all the time. So,
Are you
I
sure?
mean,
Because
not
I
all the
mean,
time,
Google
but
has been down. Like at least like certain parts of Google, like Gmail has been down for a couple hours here and there. YouTube has been down sometimes. The search engine has been down sometimes. I mean,
yeah, I guess. But like I said, more faith. Like the EC2 like cluster, like an entire zone, it doesn't is not operable. Like that is, yeah. Both cases pretty bad. So what does it look like?
hold on.
What's the
I'm
ROI
gonna.
you need? They ran out of zeros. They're like, you know what?
Okay, so that's what we're talking about. Annual percent of growth,
Yeah, it's just four
367%.
folds. Like we were unable to achieve that result last year, the years before that, the year before that either. But you know what? From now on, every single year, we're gonna grow 3 to 4 folds of revenue, of profit. I'm like, I don't know. Like, are you talking about shareholder value? Is that what we're looking at? Like, are you banking on people having that much money to give you and invest in your stock as opposed to investing in anything else? I'm not sure what you're talking about, but yeah, at least your report card that you have so far does not back the statement you're making.
Oh, it's like, let's make this clear. It's not me who's making the statement.
No, no, I'm
It's
saying the CEO, the $3 trillion. I'm like, yeah,
all right.
unless he's
Well,
saying it's $300 billion. 300 billion, I'm like, maybe it's reachable, but 3 trillion, I'm like, I don't think so.
eh,
1/5 of the current GDP. The entire nation doing nothing but working for Amazon. Like a random person you spot on the street, out of 5 people, one of them will be working for Amazon. Out of
yeah, it's
10,
bigger
two
than
of
the U.S.
them.
government. So
Huh?
that's
Yeah.
more employment than the U.S. government right there.
Yeah, I'm extremely skeptical on that front.
All right. Well, that ends that one. So let's move along. Let's see here. Looking back to China's economy, it's clear on a micro level that many people are seeing manufacturing jobs in China going, basically going out the window, and China's growth will be in the service sector, as this NPR article illustrates. Um, Once again, wanted to emphasize that these are mainly lower services sector jobs, which means they require very little skills and can be easily fired and replaced. So first they're going to be replaced with humans, and at some point, robots. Just putting that out there.
Yep. I mean, that's reality. Although there are some things humans can do that robots just can't.
Yeah, but that's not part of the low services sector.
I guess not. But at the same time, they kind of went from low labor sector, unskilled labor sector to unskilled social service sector, or service sector. I mean, that's not much of a transition,
It
but I
really
mean,
isn't. No.
it's a necessary transition, just because they no longer have labor jobs.
Yeah, it's a necessary transition. I agree, but at the same time, it's like what I've been saying. I mean, like, um, in order for them to continue to grow, like successfully grow, they have to not just transition into a low services sector economy, but also one in which you have a high services sector. And what does that mean? I mean, you have uh, jobs that require intellect, jobs that involve things like IP, technology innovation, things like that.
Yep, and for that, you need more education.
Yeah,
They're fucked. Just kidding. Oh, jeez. And this is why the world's panicking.
yep.
Like, come on, China, get your act together. Although it'd be kind of frightening in a way. Yeah, it would be kind of frightening if China becomes very advanced in the technology and whatnot, because then the world will have nothing to offer China, and then we'll have a trade imbalance again.
Well, we'll see if it gets to that point. I mean, if you look at the way they handle their IP,
Mm.
it's unique to their country, and that's the way they like things. They want things to be unique to them, and they want to be able to do things in their own terms. That, however, goes against the international norms. So we'll
Hmm.
have to see how that goes. I mean, there are other things with the Chinese economy. I mean, they're making all sorts of investments in areas like places in Latin America and Africa and other places. So we'll see how that
Hmm.
pans out, especially as they transition to this new style of economy. Will these other places pick up as their manufacturing base for China? We'll see. But moving along. Of course, the PRC government says economists should inject positive energy into their economic analysis, or else. Just a note, this is
Oh
just another
Lord.
tightening of speech in the People's Republic. What the Chinese economists actually think of their own country, we have to read between the lines. Of course, with the opacity of the state apparatus, it's more like reading tea leaves.
Yeah, I mean, economists, I probably qualify as the economist, but we are pretty pessimistic. I mean, we are pessimistic creatures. I mean, if there's any pessimism there, we're like, damn, we are the epitome, the definition of pessimistic creatures. We're
Yeah,
like,
but
okay,
you and I are
yeah,
both outside the system.
huh,
We're outside of the machine of the People's Republic. So we look at things differently from the way they look at things. And I really want to know what it is they truly think about their own economy.
no,
Like,
well, it's the same viewpoints you and I have expressed on this podcast. It's the same viewpoint that any economist would express on it. My viewpoints, are highly echoed by Bernanke and Paul Krugman. If I were to side with a school economic thought, it would be those two. And I'm pretty sure, I feel like a lot of times Krugman and I align very closely on a lot of the topics and viewpoints on things. And I swear, this guy probably had an article on it. I wouldn't be surprised. But in essence is that as they move away from their fixed currency, is that they are no longer going to be the labor specialists of the world, and then their specialization has to shift. And the question is, how are they going to what's that impact going to be? And roughly it's going to shift away from it's going to shift away from labor and into something else. The world just doesn't quite know what that something else is, and how China's infrastructure is going to adapt to that something else. And normally, economy is kind of broken down into like a labor, like something that you manufacture and export, or some sort of service that you kind of render for other people.
yeah.
And when you shift away from labor, then you shift into services. And gradually, I mean, yeah, it's just becoming more of a world power like the United States. That's exactly what happened to us. We're from a labor economy, factories everywhere, to basically services, financial sectors, doctors, scientists, lawyers, so on. Um,
Yeah, and I mean to go on to that, to expand on that point a bit, actually, uh, these same economists are not going to like Chai Xin's reporting of the PMI manufacturing for April, which after several months of slight rises is seeing a fall again. So lower manufacturing just means, as you had mentioned and as I had mentioned, that of course this industry is on a downturn. Uh, but usually anything negative like this needs to be put in a positive light with this new ruling. Um, so yeah, I mean, like you and I have been saying, they're going to be manufacturing into a services sector, but how's that going to be?
all
How's it
right,
actually going
so
to turn out?
on Mother's Day, your mother got killed by your father, and then you was forced to stab your brother. I would like you to put it into a positive light, you know, like how we say it in a good way.
I think mom has. She always had a lot of agony, and now this is a chance for her to break through this agony and
Oh,
pain that
but
she
don't
has
sound
been.
like a sociopath, okay? Make
Oh,
it,
okay.
go. It's like what are you asking me? You're like it's like okay, like Gibson, you're going to school, there's like 5 grades, but if you don't get an A, just say something to make it sound like it's an A, but without mentioning any of the grades. I'm like, what are you asking me to do?
Teacher said I had a lot of improvement from last time we took the test. Hmm.
The teacher said I'm best at something, all right.
Yeah, failing.
I know. The teacher said I'm the best at something, but not be studying. But at least I'm consistent. You know,
Yeah.
it's like that. It's like what I'm asking you for your damn grade. Why you give me the runaround? Why do you just talk straight? Oh, that's what the government wanted.
And what government wants, government gets.
That's true.
Well, hey, aside from China's PMI numbers. Now, to be fair, the U.S. has been facing this decline in manufacturing for a long time, and recently hasn't seen much improvements despite many manufacturing jobs coming back from China to the U.S. Most of the manufacturing jobs that are returning for various reasons, the just to be sure, when they return, they don't pay as much as they used to. First of all, second of all, um, the jobs, because of the advancements in technology, there aren't as much of these manufacturing jobs coming back as there used to be. Um, so yeah.
Well, as our standard of living goes up, in a way, a lot of people ask for like a minimum wage increase, and they're
Mhm.
like trying to associate it with like a standard of living increase. No, the two are not the same. So in essence, that as our per capita income goes up, our standard of living goes up, then these lower tier jobs naturally gets exported elsewhere. It's just cheaper that way. The likelihood of these low skill jobs coming back to America is extremely unlikely. We're probably going to find another third world country to basically have trade with, and then they're basically going to do this type of grunt work for us.
Um, Pretty much. I mean, until that is the singularity comes about and the robots take over our jobs. They took our job.
They might, but hopefully it's not jobs that we would like to do. Maybe you can program some sort of pleasure center in them where they just appreciate cleaning things.
Are you
Oh
talking
crap.
about?
Rewarding. They're like, yes, I enjoy cleaning a lot.
Yay.
Cleaning is great. But then I can see where that could go wrong as well. We must
Maybe.
clean the humans off the face of the earth. I'm like, crap. I should be more specific. Why was I so lazy?
It's because you're a human.
I know, I know.
Well, now on the other hand, the services sector for the U.S. has jumped up as well as the PMI numbers for the service industry has jumped to 55.7. Any number above 50 implies a steady rise in an industry or sector, and this is the more important indicator for the health of the U.S. economy since it is so heavily based on services. So, and in other
Yep.
news, in the Berkshire Hathaway investors meeting last week that was live streamed, Warren Buffett took a shot at mutual funds, saying their performance didn't justify their high fees.
Most economists have taken shots at them. Some Nobel laureates have taken shots at them. In fact, some
True.
of them have made their Nobel laureates by taking shots at them.
Yeah, I keep forgetting his name. I mean, Warren Buffett, has said it. The Nobel laureate you're talking about, the one who handles Yale's investments. Oh, geez, Yale economics professor, funds manager. His name? David Swenson. Yeah, he's one of them.
Ah, yes. Well, in essence, is that this Nobel laureate just did analysis, and then they're like, across the last like 20 plus years, is that like if you just bet on an index, you would have beaten out like 97, 99% of all like money managers.
Yeah.
And this, in essence, I wouldn't be surprised if Buffett was reading up on his research and he's like, hey, this is extremely valid and it's true. And Buffett, is from his talk, it's extremely obvious that he's a betting man, and he always like taking the side that is gonna likely to win.
Right, of course.
Yeah.
So, if you wanted to take the sage's advice, um, you can use his 90-10 portfolio mix, where 90% are in market matching low fee index funds like the Vanguard 500 Index Fund, traded under VOO, and then you can allocate 10% of your investments in short-term treasury bonds like the iShares 1 to 3 year treasury bond ETF, which trades under SHY. Now, this is, of course, the recommendation that a person who wrote for Bloomberg had. So, I mean, there might be other similar things. Well, for the treasury bond at least, Vanguard might have something, but I'm not sure what the management fees are like. And just a couple of days ago, the construction spending numbers were released for March, and since 2012, private construction numbers have jumped up 8.5% every year. Supposedly, this is led by the private housing construction. Any comments on that?
Nope. I'm looking into the shy shy ticker. I was like, Buffett recommended A, but not really Buffett, but
Well,
some other person recommended. pretty stable stock, but didn't change much in value. I mean, the change is so minimal, you might as well just left it in the bank account. It's $84 to $85 change with, dividends at I think every month. Hey, monthly dividends at 0.6%. So the yield is 0.6% annual.
Right.
Yeah. All right, back to this.
All right.
Construction spending rose.
Construction spending growth, so things are looking good. Now on to the next topic.
Nice.
Australian software writer Craig Wright claims to be Satoshi Nakamoto, the creator of Bitcoin. However, this was quickly pushed back in the Bitcoin community, and many believe he's faking it. Upon news of the announcement, Bitcoin prices had dropped. However, if you look at the chart, they were already dropping before that. In any case, it's since its inception, number one, or I'm sorry, the price of a single Bitcoin is worth $456 right now. So, would anyone like to invest in Bitcoin?
Well, technically, Bitcoins are technically only able to go up in value, I think. But at the same
No,
time,
they dropped.
well, I mean, the supply is extremely limited. Like,
Well, yeah,
so theoretically, the way you deal with the downside of Bitcoins is all right. Let's say this: you want to buy a candy bar. How about this? You want to buy a stick of gum, right? How many bitcoins do you use? 0.00001 bitcoin maybe? I don't know, right? You have to slice it in such thin slices. Now this
yeah,
is exactly the problem when Ron Paul, might upset some of the libertarian audiences, accused of Bernanke about the gold standard. Like, why don't we switch to the gold standard? Do you not understand the importance of gold?
right.
You don't understand the importance of gold. How dare you call yourself an economist? And Bernanke, being the academic he is saying that gold is not important. Practically that's his response. And then Ron Paul just, went berserk on him, right?
Right.
Bernanke is like, gold was merely a form of currency. You can replace gold with any type of precious metal in that time period, and it would effectively achieve the same result. You're gonna use silver. You're gonna use, you could use like seashells. You could use diamonds. You could use basically anything.
Yeah.
In essence, that there was no real significance to gold itself. That people's obsession with gold seems unfounded. If anything, perhaps like maybe in circuitry, but he doesn't see that much utilization of gold in circuitry as is right now. And then he mentioned stuff like maybe being teeth back then. It was more malleable than other stuff we have. So things like that.
Yeah.
So so basically that's how we respond to Ron Paul. In essence, like few words, gold not important. Of course, it threw the entire libertarian community into like a chaos and stuff. But then economists who listen to Bernanke understand exactly what he's saying. He's
Yeah.
just saying it's just a form of currency. The greenback is just as good as gold right now, just because it just functions as a means to facilitate commerce across the economy.
Right.
Now, he basically in another lecture, and I really the one of the reasons I really respect Bernanke is that he's the only few economists with like gonads. Like he has such huge gonads, they're like the size of Jupiter. Like he's a Fed chair, and he literally gave a lecture on what was the world like before, like the past, like the world, how the economy worked, what was the depression, the problem that he was trying to solve, how he solved it, and what he's gonna do afterwards. Like before he even ended his term, right in the smack of everything, right in the heart of everything. I'm like, holy crap! It was a George Washington lecture, or Washington University lecture by Bernanke, right? There's like a four-part series, and in one of them, he basically mentions that the reason why gold and metal-backed currency failed is that you have one coin, and then if your population never changes, that's fine. But before you know it, as your population grows, as more people participate in commerce, that one coin is no longer enough. If you
Yeah.
have a two persons population, you're one coin, you pass one coin to another person, the person passes a coin back to you. It's like a favor token. It's fine. But then what if you have 10 people? Well, you have to bisect that coin into 10 pieces. Well, 100 people bisect to 100 pieces. 1,000, million, 1 trillion. Before you know it, you're gonna have to like breathe coin dust at people, right? It's
Yeah.
just not doesn't make any sense, and that's why we moved away from it. The same problem we're having with Bitcoin. It's the same thing. It's that the failings of Bitcoin is that it gradually one Bitcoin be worth so much that it's so hard to make a transaction with. And Bitcoin's shortcoming is that its precision value is only up to 8 digits in precision, I believe.
Yeah.
So it's you can only slice it into so much, and right now it's already $461. I guess the good thing about it is that there's a finite amount of Bitcoin you can ever have. The downside of it is that it has the same problem that any precious metal would have, is that as more people use it, it becomes more scarce. As it becomes more scarce, the value goes up, and if the value goes up, the ability for it to conduct commerce goes down.
Yeah. I think, however, because Bitcoin isn't at the same scale of what the libertarians make it, just simply say or call fiat currency,
Hmm.
is that no country right now is using bitcoins to measure any part of their GDP or anything major like that. So thus far, bitcoins are only used in personal transactions, legal or otherwise.
Hmm.
So um, I don't think you really have to worry about what you're talking about yet.
Well, the drop that Bitcoin suffered one time is there's a few times that Bitcoin suffered a huge drop in value. It's when the underground trade network got taken down
Yeah.
for like drugs, and like yeah. So obviously one purpose of using it is that illicit like transactions and whatnot. Then the other time it got taken down was when the Bitcoin banks got hacked. So yeah, and it is all out there. It's probably I wouldn't say it's impossible to hack it. And not only that, the fact is I don't think the algorithm changes. So if the system doesn't change, it was hacked once. Chances are it could get hacked twice.
Yeah, no, there are definitely ways where you can actually steal bitcoins from other people, but I mean, like, there are patches here and there or whatever. I'm not too sure, but whatever. I mean, I don't invest in Bitcoin, so
Yeah, before you could generate bitcoins via your computer's idle processing power. Now
right.
you need specialized GPU machines with like 16 like GPU processors to get anything out of it, anything meaningful or break even on electric costs.
Yeah. All right. Well, let's move on. Oh, now the animation shows. So, well, I don't need you. Moving on to the next slide.
Goodbye, brown circle.
Yeah. Now, Fort McMurray, or McMurray, I should say, in Alberta, Canada, and I want to thank you for giving me this piece, saw a nasty fire on Thursday. Its significance is it sits right in the middle of oil sands all around it and has an oil refinery. For emergency purposes, the refinery has shut operations to prevent any possible accidents due to this fire, which means up to a million barrels or a million barrel a day, um, is offline until that is they come back on. I think they are already back on. Now the price of oil has risen up 2 cents since I filled up upon hearing this
Ah,
news.
you
So
are behind already. Since the
yeah,
morning of the news, the commodity price of oil jumped 5% already. So we were kind of very behind on that.
well, do you know what the price of oil was? I mean, like just I'm not talking about like oil by the barrel. I'm talking about like oil at the pump. How much was it?
Oh, gas at the pump?
Yeah.
No, I wasn't paying too much attention. I mean, I
Yeah.
do drive a Civic. I do work closer to home now. I feel like my gas tank like maybe once in 2 weeks now. Before I used to fill out twice a week. Man, that was painful.
Yeah. Well, in either case, so at least since the news, it only rose 2 cents, so not by much. I just really want to know what the price was before that. But if you don't know, never mind.
Yeah, I'm sure it takes. Yeah, but I mean, it probably rose in the morning, came back down in the evening, as they say, "Oh, don't panic. We're just pausing for a day or two. We're
Yeah.
not going to stop producing billions of dollars in revenue just because some people are dead and a town has burned down."
Well, on to other news. Um, one of the companies I've been looking at is Square, trading under SQ. They missed their Q1 gains, but many are saying that the picture is actually better than it is because they're using the wrong metrics to measure their gains and losses for the quarter. Regardless, the stock was down 2%. Now, keep in mind, um, their exclusive deal to process Starbucks payments will come to an end on May 17th, just 2 weeks away.
And that's probably what's going on there. Why it's dipped. Man, it's dipped pretty hard.
Well, the thing is that um, this isn't actually news. I mean, in fact, Square had already made this announcement back in October when they announced their IPO. The partnership has started in 2012 so that Square could get better exposure via Starbucks. But more importantly, it would also get an infusion of capital from Starbucks as well. From like they had like a fourth round of funding. So ever since October 1st, Starbucks was looking for new processors. Sorry. Now, if you own Apple stock, they'll take Apple Pay.
Will they take Google Pay? I think they also take Google Pay at the moment.
I'm not sure. Do they? Let me
Well,
see.
I mean, Google Wallet was pretty prominent for a period of time
Not
on the.
anymore.
Ah, I know it's kind of weird.
Oh, sorry. Google Wallet.
Yep.
Let's see. No, I don't want this
Damn
ad.
ads! Pay us. We'll take anything.
Um, oh, right. Yeah, I forgot. They also have an app that you can download and you can bypass all of that, maybe? I don't know.
No,
Into the
there
site.
has to be a Google Wallet for option on NFC. Even like Google's like such a cult. I mean, you know, programming and like I'm pretty sure with the Android community would insist on NFC. See, NFC. I see an NFC in there. Yeah. So I'm pretty sure the Android community would insist on NFC utilized.
NFC, NFC, NFC.
Yeah, I mean, there's a pride that Android developers will have over Apple developers, and the fact is that hey, Android supports NFC since ancient times. By the technology standards, it is ancient times. What's shocking is for Square is the stock price dropped so much from Thursday to Friday. Went from $13 to sub 11, 13 to 10.23.
Yeah.
That is shocking. I mean, that would have been a massively great short. 21%. If you were on the short side of things, you would have made 21%, 20 cents on the dollar. That's intense. I think part of the issue that a lot of people have is that even though they know it's coming, they don't expect things to come. And then when they actually hear the news that it's here, they're like, crap, I'm so surprised. I didn't know. Perhaps everyone was praying that, maybe Starbucks will renew the agreement with Square or so on.
No, no. I mean, this is like we said. This news was not new. They mentioned it back when they debuted their IPO in October. So it's not. It wasn't going to happen at all.
Yeah. There's an article explaining why Square got crushed. So why did Square get crushed?
Q1 reports. They didn't make any profits. Or I mean,
Uh,
not any profits, but like I mean, they didn't make as much. I'm sorry.
no, they definitely didn't make any profit at all. They lost money. I looked at the financials not too long ago. and then they're losing about 22 cents per share right now. A quarter before is 13 cents per share, and a quarter before that 7 cents a share. That's pretty rough numbers. And part of it's due to the massive increase in expenditures that they're experiencing so far.
This is what I was looking for. So no, Google Wallet is not accepted in Starbucks.
Oh no,
Aha.
that's horrible. But it is accepted in McDonald's. And uh what's that place? Jamba Juice. To the people's who are their surprise.
So um since their stock is down, Squares that is, I mean,
Hmm.
would you buy into their stock, or do you think it's like, I mean, they got too much competition?
Uh they have too much competition. I mean, I might bet for Square to die at this point. And I don't know how significant the Starbucks use partnership is, but I think it's extremely significant on the basis that the Starbucks infusion of capital into Square, like if it's a sizable chunk of the, we could probably even look back to before the adoption at what point it like um how much of that effect is, and then we just isolate that effect out and we see a drop of that much in revenue, which they're already experiencing. And if they don't do anything to cut costs, then they are going to burn even more into their cash reserves, which I'm
Well,
not sure
no.
they have too
I
much of.
mean, even though Starbucks said that they would stop accepting Square payments, Square is still processing the payments that come through like their credit cards, anyways. So all credit card transactions are still going through Square, which Square gets a cut from. So I mean, even though they're not renewing, even though Starbucks isn't renewing their partnership with Square, it doesn't mean that Square is not. Um,
So you're saying Square is still a payment processor for Starbucks?
yes, until
Okay,
the next 2 weeks, at which point they'll be using Apple for that. Now, before Square, they were using Bank of America.
I see. Yeah, I mean, bad news for Square altogether. And even worse news is they're not even turning a profit. It's like, we'll give you money for you to use our service, and you still walk away. That's that's kind of bad altogether. But I'm not saying that's exactly the case. But if you're in a business, look, I say this sometimes. Um, you're not a business unless you're making a profit. If you're operating in the negatives, you're more of a charity. You're giving back to the
Yeah.
consumer. That's why you lose money. You're not really in a business. In your business, you make money, you profit. You don't have these red lines everywhere. So in this sense, I'm like, I don't know. They must be offering something of value, but whatever they're offering, Starbucks like, you know what? We don't need it. You know, whatever you have is not as good as what Apple's offering us. If anything, I'm paranoid that Square customers be like, hey, I don't know what happened with Starbucks, but apparently Apple is offering a better deal, whatever it might be, right? We'll hit them even harder. I have no idea. But I don't know. It's kind of like my viewpoint on Box, which is a company like looking at Square as a new up and coming company trying to take on big shots like Visa, Google, like Google, like Visa has Visa. Everyone knows Visa. Everyone knows Mastercard.
Google is failing in this, in this arena. I mean, and they're a big
They
company.
don't, they
Come
don't
on.
have to win. They just have to make it tough for Square. You know, like Google can bleed money all day long, no problem. But for Square, they don't. Square is basically the single sector of the business. Like the payment processing is pretty much all of the business, right?
Well, no, there's also the payroll aspect. So in those regards, though, they are butting up against companies like Intuit, ADP. You know,
TriNet is another one.
yeah. And then on top of that, they're also offering small business loans. So once again, coming up with, I mean, it's still all related to each other, but then that also means that they're also butting in up against like other traditional industries, like the small business loan industry and all that stuff. So.
Well, at the end of the day, as investors, what I want to see is for there to be profit. It's
Yeah.
like you're like, hey, you know what? I'm not making you money, but I spent your money on a Lamborghini. I spent your money on a yacht. I spent your money on a garden. I spent your money on a house. I spent your money on a new house for me. And you're like, okay, great. When am I gonna see a return on my money? Right? Oh, about that. Somehow it's gonna pan out. I'm like, okay, how? What's your game plan? And right now, it doesn't seem like they have a very clear game plan. If they could say instead of in to coat this extremely negative, to help people swallow this extremely bitter pill, it's maybe they could say, you know what, we are killing it in the payment processing sector. We're killing it in the finance sector. We're killing it in any other sector. We're doing so great. No, they can't say that, and that's why I'm pretty sure like investors are disappointed. And it's Warren Buffett calls it the moat. Economists calls it the barrier of entry, and in essence, is that these economies of scale, or these businesses of scale, which they keep growing and they get more and more business. What they do is they build barriers of entry to make it harder and harder for new companies to get in. It's kind of like it's like a firewall, where as you try to go through, you gradually disintegrate yourself. And you have to have enough juice to break through that wall before you can actually succeed in that industry. Like Facebook, had to deal with at the time had to deal with like Zanga and Friendster and all these places. Like back in the day, Friendster was like the shit.
Yeah.
Zanga was the shit. Yeah, Facebook had to break through that firewall to become the powerhouse they are today. Google had to break through Yahoo's, AOL's firewall before they got to become what they are today. And Square has to break through Visa, Google, Apple, Mastercard, like all these American Express, they pay all and banks, in general for payment processing, before they become the powerhouse that they want to be. That's tough.
Yeah, it's tough. So ultimately, you have to ask yourself, do you believe in the leadership of Jack Dorsey, the guy who, keep in mind, also is CEO of Twitter? And do you believe the fact that he can actually run two companies at the same time?
Well, I don't care about if he can or not. I just care about results. And the results so far is that he's failing at it. Like whatever it is, as an investor in Square, I don't care about any other company you're managing besides the one that I invested in. And the one I invested in is in Square. And so far, you're just bleeding money every single year. Like this year, like 2015, you lost me 173 million dollars. The year before, you lost me 150 million dollars. The year before, 100 million dollars. I'm just like, I don't think I can trust you to manage my money. That's basically what it boils down to. I'm just like, that is a lot of money to lose. I mean, I wish someone would pay me this much money to help them lose money. I wouldn't mind doing that at all. This sounds like the best job in the world. Yeah, I do not trust their leadership on this front at all. It's pretty this yeah. I'm looking at the annual data as opposed to the quarterly data. $173 million, 150. Every single year you lose me more money. Now, I've been part of the startup world a lot, and I've seen way too many companies do this and to a certain point discuss. And any investor that invests in these companies, I don't even understand what they're doing. I mean, it's just silly. So they increase the revenue. They're going, you know what? Every single year we're growing revenue. 2012 we had 203 million. We more than doubled our revenue. In 2013, we almost more than doubled our revenue. We almost doubled our revenue in 2014. We almost doubled our revenue in 2015 and stuff. Yeah, well, you also did it by increasing your expense. You know, and yeah, the thing is that you can fake you can fake revenues very easily. All you have to do is basically buy your own product with investor money and then pay the transaction costs. And you can make it as high of a number as you want. And the expense would just keep going up. You could fake that. And it's just stupid. I
Well, to
yeah.
be fair, though, there. Hold on, wait. Where's their expenditures? If you look at the total operating income, they're losing less and less. um, Granted, that also means that their total revenue is also going less and less as well. So
Total operating income? Yeah, that
yeah.
that's it. All right, so total operating income is total revenue subtracted by total operating expense, and you get your total operating income. It's kind of like a little counter before you do all the other stuff. And then the number that matters the most is the net. And then to the shareholders, the one that kind of matters the most, kind of EPS. You know, it's like, okay, how much on a per share basis what's going on? You know, that's what I want to know. You know, for the $10 I gave you, how many cents you lost me? But for all in all, is that a good CEO, a good management, you can tell. It's not hard. It's kind of like Buffett, like manage your own business. How can a business that constantly lose money basically be a business and be profitable and exist? You know, there will be more concerns regarding the cash flow, like how much cash you have operating, because basically you operate on cash. So, you know, cash might be an issue unless more shareholders invest more money. There will be issues of balance sheet, like what you have, that actually how much debt you have and how much you owe, how much did the shareholders give you, and how much of that you're burning down before you have nothing left. So those are things that are going to be more in focus later on as this company suffers more from the negative news. You know, like you look at the liabilities, you know, like how much did you borrow? So you look at the 2013 liabilities, they borrowed money for like they had 156 million dollars borrowed. 2014 they borrowed 268 million. 2015 they borrowed 400 million dollars. And then that gave it, you know, basically on the whenever you borrow something, when you have a liability, you also have an asset. You borrowed, like, so basically, let's say you borrow $400 million. Well, you gain $400 million in cash. So the two kind of balance out. If your shareholders give you another 40 millions of investment for your stocks, you give them stocks, and then they give you cash. So you basically, you gain a $40 million in assets, and you gain $40 million in equity. So that's how the numbers work out.
Hmm. So you gonna short it then?
I think this would be something I would throw into my short pile. I mean, of course, like, I mean, the 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 main problem I have to do, the main reason why I have to consider shorting this stock is if you were to, I haven't even seen it, but I could take a look at the trajectory for the stock. I bet you it's been going down since last year, like been a downward spot, like downward trend. Oh, well, maybe not, but I guess in the last couple of months. I guess not. But the last couple of months have been really horrible. I guess we had hope. Investors had hope until just recently. They're like, oh no, no hope. And I think every single investor is hoping for this. They're hoping that they renew, they renew their stuff with Starbucks, and they'll get
No,
more.
no, no. But that's the thing. They had already announced that they weren't going to renew in October during their IPO. The investors know about this. At least they should.
Well, another factor it could be is that one major shareholder that held the shares of Square decided to just sell massively. And that could be another factor as well. Like a person, like either this effect in the increase in supply can be achieved two ways. An institution decide to just release all share that they have of Square at a certain price and drop it, or like communally, everyone decide to sell the share short. So if it's not, based on shareholders' massive wide perception of the issue, then it could be an insider just releasing all his stocks. They are entitled to sell their shares. And as there are a few steps, like they could announce that they are selling the stock, and then the SEC gradually approves it. There's a few things they can do, or they could sell it afterwards, and they just have to file a 13F form.
I mean, well, going back to the article that we had earlier, right? So this one, I mean, basically they uh, let's see, rose $10.3 billion. I mean, adjusted revenue, excluding transactions processed at Starbucks, came in at 146 million. And I mean, that's up 64% on an annual basis. Uh,
This Square has only been in play apparently for a year almost.
their stocks.
their stocks. Yeah.
But if you're talking about like operating, then I mean they've been there for a couple of years.
I wouldn't say I have too much faith in the company at this point, although they have a lot of market cap to burn through. But I mean, the shareholders, the minute they realize that, hey, this is not cool and kosher, they might just lose. I mean, they would just sell it. There's a lot of factors in our current economy is that no one really wants to hang on to risky stocks. You know, like there's no other. Let's say investors are diversified and there's a basket, right? There's a basket of risky things, there's a basket of safe things, there's a basket of profitable things, and so on. Well, this is kind of in the risky pile, and as the concerns tighten, as people become more conservative, they might not as be inclined to take on these like tech stocks that are like bleeding money and have no dividend. And basically, there's like, how do you, at what point, like stocks intrinsically pretty much have no value. Stocks, like like back in the day, people bought stocks because there was a dividend. It's in essence like lending money to institutions. In fact, that's kind of how the stocks came to be. Is that companies were too tired of the restrictions that banks were imposing on them to borrow money, and instead they basically borrow from everyone else. They have this. They invented the stock exchange to do exactly that. With Square, like, why are you giving them money? Do they give you dividends? No. Do they have a game plan to increase their value? No. It's kind of like I believe Bank of America had a story, and one of the shareholders, I think she's like 14 or something, and she had like $200,000. Her parents gave her like on her birthday like 200 on the day she was born or something. She gave her like enough shares to equate to like $200,000 at the time, and then it's dropped to maybe like one fraction of its worth now. It's like maybe 100,000 or less than 100,000. And she asked the CEO, what is it that the CEO's doing to increase the value, the price of their stock? And it was so shocking, and I think it's very ingenious. It kind of does strongly reflect what the CEO's job is. Like, what are you doing to increase the value of the stock? So if it's very clear that the CEO's not doing that great of a job of increasing the value of Square, there's no dividends return, and the stock is losing money, I really see no reason to. I don't see an upside for this company. So if I were to take a stance between buying Square, not buying Square, or shorting Square, I'd probably lean toward not buying Square altogether and either shorting it. Just because I'm like, well, it's clearly, you've clearly been taking a beating, and it looks pretty ugly for you, and I'm not sure how much longer you can hold on to this thing before you drop off the face of the map. Which makes me wonder, how is Box doing? Because Bach is even worse. They're going up against Microsoft and Google, basically doing the same thing that Google and Microsoft was doing. Yep, I should have shorted it. Oh well. It's opened at 25 and now it's at 11.
Whoa! Like
Yeah,
within a day?
within a year.
Oh well.
Yeah, I mean,
I mean, if it
like,
was within a day, I'd be
well,
like,
at the beginning of the
damn.
day, it opened at 23, and then it ended at like 23. It dropped a lot. I think it dropped to 20 or something, but then within a week, it dropped from 23 to the $18. And it's been a steady downward decline just because the CEO is kind of new, and then his opponents are tough. It's like a bet, David versus Goliath. Now David can has taken down Goliath by godly luck and blessings, but statistically, that's just probably not going to happen. Underdog oftentimes just doesn't win. If the game's stacked against you, chances are you're not going to win. That's just how it is. That's why the casinos exist, and that's how they can have so much water in the damn desert. You know? Yeah. So I don't know. That's my viewpoint on this.
Okay. Well, let's see. And let me hold on. I'm like bouncing through different windows here. All right. So let's move on to the next topic then. Sick of the volatilities in the markets? Well, Goldman Sachs explains how you can actually make some gains in the market. Basically, they're saying that international markets and commodities have been down for the past 2 to 3 years, and it's a chance to get in on some discounted items. What's your take on this then?
Oh man, I tried to get on the commodities market when I found out about the Fort McMurray,
Oh,
and
yeah.
then I failed to get on it just because I trade via Merrill Edge. Just because how can you say no to free trades? So yeah, but then they don't handle commodities,
They
and
don't?
no, yeah, they don't. You have to
Huh.
like find another exchange or broker for it, which I haven't had time for, and I said fuck it. But if I, I think it does highlight the importance of opening yourself to every single possible venue you can have to make money. So perhaps, it's something I should look into in the future. But as a investor, I wouldn't say that you make your money. The only thing I could say, truthfully, as an investor that is consistent is that you don't know how you're gonna make your money, but you do know an opportunity when you see one, and you should take advantage of it. And for example, the fire in McFurry, the opportune time was basically if you're in the know, which sometimes most of us aren't. You know that
Oh,
there's a
no, that's kind of vicious right there.
Yeah, basically it's you're in the oil business, and like Fort McMurray is a huge oil supplier, and then you knew that there's a fire there. You're like, oh fuck, it's the oil, it's a refinery, and everyone's gonna panic. So everyone jumps in on the commodity and they buy it. And of course, as the panic subsides, you sell it. So once you made your 5%, you can see that spike up, and it's gonna keep spiking up because everyone's agreeing with you that is gonna, yeah, make you feel like a McFurry right now.
I
It's
am.
not McFurry, it's McMurray. I believe the fort's McMurray, not McFlurry.
Look,
Like,
in all this drastic heat, um, you may just want to eat a McFlurry to cool yourself down. Now, full disclosure, I do own stock in McDonald's,
and
so
so do I at this point. I do believe McDonald's. I made some good money on McDonald's and some of the couple of bets I made this week.
yeah.
I'm a big fan of Disney, a big fan of McDonald's right now. I'm shorting Caesar, and I'm not touching Bank of America until it settles down. It's like a wild child right now, going all over the map.
All right. Well, let's go ahead and take a look at the week in review. Um, Now, the the little text. Okay. So yeah. Although we ended Friday on a slightly up note from Thursday's performance, however, actually the week at large, um, from Monday's highs, where we were actually past the 18,000 mark, we are well below that mark already. So now, with Friday, the rise came because the employment situation report came out, and things were actually looking good for April. 171,000 jobs were added. So, if you take a look at the international markets for today, um, Australia being the first market to open in that region, they had an initial rise. Well, it fell down and then it kind of like shot up really high, only to kind of like just fall back down even lower. Um, Now, this came from the news of a finally weaker Japanese yen and a good U.S. job gain. But then, yeah, I don't know. I'm still trying to figure things out. Now, a weirder pattern is the New Zealand stock market. I mean, I've never seen this before where it's like dead flat. Like, this only happens whenever you're, I don't know, dead, dying or
Huh?
something. But,
Were
like,
they
I mean,
closed for the day?
I don't think so.
It looks like they were closed for the day because there's no way it could be that flat.
I don't know, whatever. But then, I mean, look at it. Like, even if they were closed, right? So to open at that weird hour, because it's like between 11:46 and 12:46. So I mean, that's not exactly quite like 11:50. And if
Maybe
either case, I mean,
they had some issues starting the system back up.
yeah, maybe. But then I mean, like, still that drastic drop, and then rise back up a bit, and then like, just coasting along downwards. It's just weird.
Yeah,
And
great.
on top of that, the Nikkei shot up and then came back down as well. So this seems to be a common theme amongst most of the Asian nations so far. Now, Japan, unlike the other two we just mentioned, they're actually like they were still in the black last we checked. This is a couple hours ago. So now, I can't say that this company is dragging the Japanese stock market lower, but Takata, the Japanese company that made faulty airbags, is being or is having another round of recalls. Honda Motors Company, the company that was embroiled with this issue initially a couple of years ago, saw their prices shoot up by 0.6% in contrast, while Takata's is down. So, um, now, after coming back from a 2-day holiday last week on Thursday and Friday, the Korean stock market opened weak before coming back in the black for a bit, only to ultimately slide again. And I have no reasons for this so far.
I
So,
think investors' confidence in the world stock market is just going down, you know? It makes sense. I'm withdrawing money. I'm advising people to withdraw money, and people I know in play are withdrawing money and just holding on to cash. It's kind of like an ocean, except everyone has a chunk of it. They own a chunk of it, and they could throw it into the ocean or a pond. You know, it's a pond. Everyone holds a chunk of the pond, and they could basically contribute their 100 gallons at any point in time, or just fish it out. You know, and everyone's like, let's fish it out. As the water is starting to look kind of murky there. You know, we want our clean water. We don't want that murky stuff.
yeah,
So right now,
so far with all this news, or with all these drops this Monday at least, it's completely contradicting what this guy at Bloomberg or Goldman Sachs is saying. So,
what is he saying?
well,
Things are great. Keep
they'll run a
buying.
couple.
It's a good buying opportunity.
Well, I mean, yeah, you could view it like that, I guess. But yeah, this guy right here, he was saying that like basically you can find some profits in the international markets and commodities. So I don't know if you believe him, then this is a
Well,
perfect time
perhaps
to
he's
buy.
talking about, like, hmm, so it's in essence that the US dollar is probably going to get stronger. Um, Things overseas will become cheaper relative to US dollars. You could lend US dollars out, and then you could basically it's a short. You lend US dollars out, you can make money that way. You can, and that's roughly it, really. You borrow foreign currencies and
Yeah.
then repay back later for a fraction of the cost. That's another way to make money. You can, I guess, since everything else is so cheap, you could buy something you always wanted, like maybe a house in Greece. I
Is
don't
that?
know. Yeah, I mean, I don't personally never wanted to consider a house in Greece, but it's like, hey, you know what? For the price of a hamburger, you can get yourself a house. I'm like, okay, I'll take 10.
Well, all right. Well, Korea aside, Shanghai, the Shanghai Composite was down as well. The declines were mainly led by the agricultural industry. Regardless, I mean, we're just continuing the theme of down, down, down all over Asia.
I
Um,
I think the fact that you highlight the agriculture aspect of it is kind of interesting. So maybe we can analyze the indexes based on the sectors that are the large components of it. And then if those sectors go down, then we can expect the index to go down as well.
hey, I'm just reading off of what these news articles are telling me, man.
Yeah,
So
exactly what you're saying.
now,
It's
on top of the uh, agricultural industry leading the fall. This is also following its trend from last week. April exports fell 1.8% from a year ago. So March's uptick in trade last month or 2 months prior didn't exactly help all that much. Imports, however, are also on the downside too, especially in the areas of iron ore, coal, crude oil, and copper. Plus, their metals commodities fell sharply. So,
things are getting rough.
yeah. Um, no comments on you? I mean,
Well, things are getting rough.
all right. Moving along, Taiwan, of course, isn't faring much better. I have no news on why they're doing this, but it's Taiwan.
Well, just
Um,
understand that, a fraction of the, like total wealth, you know, basic traders like you and I don't have any meaningful impact on the movement of the market whatsoever.
no,
Perhaps we can, you know, set off some auto traders here and there that do have a meaningful impact, and that's roughly it. There was programmed with a bad signal, and then we triggered it, and then presto, some effects, which some hackers have taken advantage of. So, that being said, is that yeah, we don't have any meaningful impact. So if any big fish, in the market, like for example Vanguard, like major institutions decide to sell anything, it can have crazy effects like this. And then there's also the role of the market makers, where, if there is no move in the market, then their job is to roughly create that movement, to create that volatility, to make things go up and down for the very reason of facilitating trade. Because then without some type of movement, people just aren't gonna bite. We're very much like fish in that regard.
yeah. Well, in any case, Hong Kong's Hang Seng Index is the only outlier in Asia whose stocks actually rose this Monday, at least last we checked. So now, this is ending last week's decline and coming on the news of gains in the U.S. stock market and oil's rise. Like we said earlier, Hong Kong's dollar is pegged to ours, so this might be it. Yeah,
That's true.
yeah. So let's go ahead and take a look at the playbook. Now, again, just a reminder: none of the following should be misconstrued as financial or investment advice. This is merely provided for documentation only. Honestly, I haven't checked anything on my positions on Phillips. They're Cunnington Phillips.
I would say it probably went down because of Fort McMurray, but then maybe it
Oh,
recovered.
it's like the the European version of GE, pretty much. Like they
Yeah,
have their hands in any sort of
everything.
like the energy sector, the health sector, and in some financial sectors as well. Like
Hmm.
some aspects of the financial sector, I should say.
Well, I'm just saying, I wouldn't be
Okay,
surprised if the news from McMurray dropped it for maybe a few percents.
all right. And so as far as your positions in McDonald's, if you don't mind my asking, like how many shares do you have?
I don't know. I think 50% of my life savings in McDonald's and 50% of it in Disney.
Oh, okay.
I'm roughly that confident in the stock, and the main reason why is that they're gonna have their dividends being released very soon.
Oh yeah,
They release it like the last time they distributed this was November, and then
yeah, and
they
they raised it.
distributed. Yeah, and they raised it. So, and this is in an economy where everyone's kind of like, I'm nervous, I'm not too sure. And here's McDonald's like, you know what? We've been increasing our revenue since forever, our dividends forever. We have so much money, we don't even know what to do with it. Here, take some back,
Yeah,
right?
have some money.
Yeah. So in this, like I've been watching the Dow components and when I see they're just the components in general. In a down market, McDonald's is doing really well on the down days as well. And
Oh
I
yeah,
feel like there is a safety cushion effect that's occurring. Like it's like a safe harbor effect where people are looking into these stocks that are in negative times. Like, hey, you know what? These stocks are doing really well, so we're gonna buy into it. And I feel like it's just going to be the continued trend as we embrace more volatility in our markets. So
yeah,
I feel like McDonald's is pretty safe. The other stock I have is Disney, and I feel like I'm a big fan of the Shanghai Disneyland. That before it has even opened, it's been trashed by tourists.
yeah.
It's like densely packed with tourists, and it's just trashed all over the place. And I'm just thinking, wow, holy crap, what will happen when it is open? And just think about California, the California Disneyland, they had to raise the prices because there were so many people.
Right.
How many folds? Would they have to raise the price to keep out the billions of people in China? I'm like, holy crap, maybe it's gonna be the playground of only the elites. Only people who can afford 10 Rolls Royces can come. Who knows? But the amount of money that they can charge them, that's gonna be insane.
Oh yeah.
So I know I'm a big fan of these two, so I think it's relatively safe. But of course, I don't expect a lot of movement. So even though I have a significant amount of my money in there, I don't expect it to move too much. Or at least on the downside. So with proper limit stops in place, I can, avoid any type of negative risk. Although my perception and my bet for this investment is at least 2 months. I want to see what happens for the next 2 months. And I want to be in there for that dividend distribution. McDonald's at 2.75% and Walt Disney is at 1.35%. So I'm getting a fourth of that, interest rate for a year, and I didn't even have to lend them the money for the entire 3 months.
Right. Well, did you make it in before the declaration date though?
um, think I will be.
Yeah, you might want to check on that.
Well, either way, it's still going to climb.
Yeah, either way. Well, let's move along. Let's take a look at the week ahead. Monday, you have the labor market conditions and TD Ameritrade's IMX. Tuesday, you got the small business optimism index and the wholesale trade numbers. Wednesday, you have petroleum status reports. Thursday, you have the weekly jobless claims, consumer comfort index, plus the import-export prices and the EIA natural gas report. Friday, the 13th, retail sales numbers and consumer sentiment will be out. And then internationally, Monday, this is a little bit out of order, but Monday, the German manufacturers' orders, PRC's consumer price index, and their producer price index will be out. Tuesday, you have the industrial production for Germany, France, and Italy. That'll be out. Wednesday, Britain's industrial production numbers will be out the following day. And then Thursday, India's and France's consumer price indexes will be out if you follow any of those markets. And let's take a look at the recommendations. So I pulled up this video on something called the 10 bagger. Basically, the concept is if you get in on a stock early enough and it goes up tenfold, then you've basically increased your profits by tenfolds minus the seller's fees and all that and the taxes you'll have to pay. But still, if you make enough of these, you might become a millionaire quicker than you think.
There's this game in Vegas where it pays you 32 folds if you just land it. 10 baggers to increase a tenfold increase in any type of price, that's pretty hardcore.
Well, think about it, right? Stocks, even though you don't like the way the performance of Tesla has been, frankly, as far as stock prices goes, they've increased tenfold. Google is a perfect example of this. Apple is a perfect example of their stocks having gone tenfold. Facebook, of course, is reaching that point. So
the strategy for you to make a lot of money is for you to buy something and have it go up in a lot of value and then
yes,
sell it.
buy it early enough. That's
I
the key thing.
see.
Is the main thing is to buy it early
Yeah,
enough.
I know. I just think this advice sounds awfully stupid in that sense. I think an advice on how to identify a 10 bagger would be better than to just sell it when it reaches tenfolds.
I don't think there are ways to identify 10 baggers so far. I think mainly, that comes back to um, doing research on, the management and things like that. And then once again, talking about what we've been mentioning, do we believe in the strategy of the managers that are in that company? So,
Yep. If anything, maybe a 10% rule where your stock climbs beyond a certain value, you sell it. Or maybe a 10% loss rule. In essence, it's the same rules you apply for gambling. Is that do not bet more money than you can lose. Know where your limits are, and then basically once you hit it, get out. Give yourself a break, and then look for next opportunity and plan again.
Now, one thing I haven't gotten to, and this just came in a couple minutes ago. Japan is ready to intervene if yen moves too volatile, says their finance minister. This literally just came in a couple hours ago, I think, from Reuters. 12:26 EDT. So that's, yeah, 2 hours ago.
That's crazy. We're entering an age of regulated currency. That's gonna be interesting. This is gonna have a world impact. Japan's gonna start regulating the currency. China's gonna start regulating the currency. The Greece is gonna get out of the EU and regulate their own currency, and so on and so on. Possibly,
Let me get an update on EA here.
but that's big news.
Okay, let me get the 1 day. Okay, wow. So, yeah, so this is where they close for lunch, this gap right here, and then they open back up, and then they're kind of climbing slightly. Yeah, they're up.
Yeah,
So,
it's good news in a way. At the same time, is that part of the free trade system we have is that it's supposed to be volatile. Regulated stuff is supposed to be steady. Free trade stuff goes up and down all the time.
yeah, we'll see. All right. So, let's see, this is the end. So we may or may not have ownership or those positions in the stocks mentioned in the show. Don't buy stocks based solely off of what you hear from this podcast, and always do your own homework and research before investing in stocks. And if you like this episode, please go to our YouTube page, youtube.com, and then type in CONGKERINGPATH. You can find our website right here. And so YouTube page, please click on the subscribe button, or you can go directly to our website, why.conqueringpath.com. And we'll have the video up soon. So that's it.
See you guys later.
Yep.